After crude oil recently witnessed a bullish reversal at this bottom support at around $59, we are currently seeing it form out a new bullish trend as we are currently seeing the RSI crash under its moving average. And so in today's video, we discuss whether this is actually a sustained bullish rally or whether a bearish crash might be happening next here to crude oil. We're going to have a look at the most important fundamentals and macroeconomic indicators to actually understand the key economic drivers of crude oil. And so let's start right away. You do see here on the weekly chart that we do have marked those recent tops at crude oil here in 2008, here in 2014, here in 2020, and also after the COVID crash here in 2022. And we've also opened up the gold to silver ratio, the DXY, and the gold to S&P 500 ratio. And as you might already see, we do have interesting correlations at this point. You do see that, for example, previous to the great financial crisis, we've seen that inflationary boom happening also to oil prices, obviously, because obviously also the DXY was weakening by a lot at this time. We've then seen that bottom forming out. That actually also coincided to a trend change from a weakening to a strengthening gold to silver ratio. And we've also seen that reversal happening obviously to the DXY. And that coincided to the gold prices actually outperform the S&P 500. And so obviously that shows you beautifully that gold is actually outperforming not only the silver prices, but also the S&P 500 in those periods. And whenever you do see that reversal happening here at the gold to silver ratio, whenever you do see that massive strengthening here at this ratio between gold and the S&P 500, as well as this trend change here at the DXY, that is really a sign that should let the alarm clocks ring at you. And so we are currently having to take a look at what is happening to those metal prices. And you may see that we are currently having this reversal at the gold to silver ratio, as we've seen it here previous to the 2008 financial crisis. And so we're having this indicator actually signaling a crash potential. At the DXY, we have seen this weakening actually hitting this long-term trend line right now that actually empirically coincided to a lot of bullish reversals here at the DXY in the last few decades. And so if we do actually see the dollar to strengthen, we might see a reversal here at the DXY actually indicating this crash potential. And we are also seeing the gold to S&P 500 ratio actually rising for quite a while now. In fact, the S&P 500 measured in gold has really topped out in 2021. And so whenever you do have a look at the S&P 500, it does look a little illusional because it is measured in dollars. But the dollar is obviously not a constant. It is quite manipulable. It can be manipulated. And so in other words, you have always to take a look at those indicators to actually understand those events that we are currently seeing here. And you have seen that actually historically coincided to a lot of downturns here at crude oil, not only here in 2014, also in 2020, and also after the 2022 inflationary boom that we've seen. And this downturn basically is currently still on until we do see a massive breakout to the upside. And so if you want to not miss those key economic indicators and like this approach that we're having here across, please make sure to subscribe to our channel and like the video so you don't miss future videos, and also support us here for our work on YouTube. And also make sure to comment down below if you have any questions. And also make sure to join our Discord server, which is also linked down below. And so to actually conclude what we're currently witnessing here at crude oil, obviously you do see those key signs here, not only at this ratio, at the gold to S&P ratio. You also see this weakening dollar. You also see this gold to silver ratio reversing in fact already. But obviously, this is actually currently coinciding to this weakening rally that we've seen in the last few years. And so it does look a little different to what we've seen happening before the great financial crisis. But at the same time, we have obviously seen quite similar things before the COVID crash happened. We have also seen a consolidation before the crash in 2014. And so obviously that suggests we could see a crash happening out of a phase of consolidation or maybe even weakening. And if you have a look at the interest rates, in fact, you do see that empirically, just rationally seen, this has always actually preceded those crashes that we've seen the last few decades. And so we're quite concerned because of those interest rate cuts, because of this necessary correlation to what we've seen happening in the last few times. And also, if you now have a look at the bank's balance sheet, you do see it has actually, for example, here previous to the 2020 crash, actually expanded before the crash happened, which also preceded the crash, which actually used to be a sign for this crash happening. And we are currently having the same transition. And so at Kronos, we do believe it is the cleverest to actually be quite conservative on the commodity markets right now, and also obviously on equities and other asset classes. If you just have a look at it empirically, you do see a lot of correlations to the history that you, for example, have seen here previous to the great financial crisis. And we do see those key indicators like the gold to S&P ratio, the DXY, and all gold to silver ratio behave quite similar to what we've seen happen before those previous crashes. And also, we're currently seeing this massive shift in geopolitics, a lot of uncertainty, and the underlying fundamentals like supply and demand do, in our eyes, do not have the impact on crude oil right now. Obviously, if we do see a world war with the Strait of Hormuz being closed, that will have a major impact. But the war itself will probably have crashed those prices already. And so we do believe those macroeconomic factors with monetary policy, they do have a big impact. And if we do see credit actually decline, if we do see the money supply decline, as we've seen it happen here in 28 and also in 2020, you've seen what happened. You've seen those crude oil prices crash, and you've seen that coincide to the gold to silver ratio spike up, to the DXY to spike up. Obviously, here it has been in 2020. It has been a little of shorter period. It was a flash crash, not a long-term recession. But you generally do see inflationary crashes happen. You do see the gold prices surge after the crash, after the deflationary crash happened. And we're currently seeing those indicators speaking that language. And so we advise you to be quite conservative concerning those commodities markets right now. I hope you enjoyed the video. I hope you learned something new. If you did, please make sure to subscribe to our channel and like the video so you don't miss future videos, and support us here for our work on YouTube. Thanks for your support. See you the next time. Bye bye.